Money FM 89.3, the best of the afternoon update.
In recent months, we hear about Japan making bold strides to reclaim its position as a leader in the semiconductor industry by establishing chip cities. Now, chip cities are vast areas designed to house advanced chip foundries and research facilities. In fact, the country is investing $25 billion to transform rural towns into semiconductor manufacturing hubs, aiming to revitalize its economy and reclaim its global industry leadership. Now, this ambitious initiative not only signals a resurgence in Japan's tech capabilities, but also raises questions about its broader economic impact. From revitalizing the real estate market to fostering innovation across industries, these developments could reshape the nation's industrial and urban landscape. To explore the potential ripple effects of this strategy on Japan's real estate market and tech sector, we're joined by Gareth Nicholson, Chief Investment Officer and Head of Managed Investments at Nomura. Thank you for taking the time to speak with us today, Gareth.
No problem at all. Thank you.
Now, Japan's equity market has seen some positive momentum in recent years. So to start, could you provide us with your view on the current state of Japanese equities and what's driving the performance?
Absolutely. I think it's actually seen phenomenal change in momentum over the last few years. We shouldn't forget that Japan has been a sleeping giant for a few decades, unfortunately, as inflation remained very low and we didn't see the natural growth that an economy would like. It has been difficult for investors to get very excited about something like Japanese equity. But that's really shifted over the last few years. We've seen wages increase. We've seen big fundamental changes in the way that the Tokyo Stock Exchange has been managing the exposure of the Japanese equity market. You've seen corporate governance change. And this all at the same time happening when what Japan makes is becoming incredibly popular. You know, Japan is known for electronics, known for robotics, known for technology. And these are all very much in the high demand theme. So Japan is a very interesting place for us and remains a high conviction at the moment.
Speaking of which, how are Japanese tech equities performing? There's been much attention around global tech stocks. So how does Japan fit into that picture?
Well, Japan is interesting because Japan doesn't really have any huge market leaders. They don't have the same as in Taiwan or even in the US with the Mag 7, big concentrated monopoly-like leaders. What we have in Japan is a large supply chain. You'll have many companies that support many. There is potentially space for more mergers and consolidation, but Japan has the whole production line right from the very basic to the very high end. And that's becoming increasingly important from a global perspective when supply chain is becoming a bit more regional-based. Globalization is seeing threats with the new changes that are happening around tariffs, that are happening around geopolitics. Having an economy that has such a large variety of the supply chain makes it interesting. And that's why a lot of investors are looking at this space and why the performance is remaining very robust.
Okay, Gareth, earlier we talked about Japan's resurgence and ambition to build chip cities. Can you tell us more about that? What's happening there?
Well, it's still very much, plans in action. We only expect the first 2 nanometer chips by 2027. We know that the government is very supportive, and this is something that we're seeing across the section. So if we broaden out for a second, building regional resilience, that's having access to defense, having access to energy, having access to food, and now another essential is having access to technology is becoming something that regions are really ensuring that they own the space. You're seeing semiconductor manufacturing happening in many different regions. And I think Japan realizes that as the world becomes more inward focused on different regions, globalization is struggling. Japan has an opportunity to use its expertise, its legacy, and build it up again. So that's why we're seeing huge amounts of money being spent in the space, in the 2 areas that we talked about, to build this up. I mean, Japan used to have a pretty decent market share of semiconductors worldwide. Now the market share is below 10%.
But having said that, Japan has often been seen as a more conservative market, especially in comparison to tech-heavy U.S. equities. Do you think there's a growing trend towards risk-taking and innovation in Japan, particularly in the tech sector?
Don't really see it being risky. You're creating an asset that is in high demand, that is extremely difficult to produce, There's only a few places in the world that have the technology to do so. You have a political environment that's increasingly stable, that is geopolitically stable, that you have more countries that want to partner with them. So I think this is a natural move for them. I don't think they would see this as a risky area. And then you tie into the fact that they're looking to redevelop certain areas in Japan that have been underdeveloped. They are bringing in new investments. There is a lot of interest in building these sort of assets across the globe, and particularly in Japan. You're getting foreigners coming in when the currency is relatively attractive. I think this is a number of winds blowing in the same direction, causing a bit of a super tailwind.
Okay, where do you see the future of Japanese technology equities as we see technological revolution unfold globally? What are some of the key areas of opportunity?
Well, for us, we think technology, particularly AI, is still in the relatively early stage. The way that we like to describe it is, imagine the technology of the refrigerator. Fantastic technology, right? Mm-hmm. It did help a number of industries. But then what happened when Coca-Cola came along? Coca-Cola were able to use this technology, were able to move their product around the world and really revolutionized. We're at that stage when we're just starting to get Coca-Cola start using AI, start using information at a much more practical level. We're starting to see the reawakening of robotics, robotics with AI brains now. And I think that there's a huge space for Asia to run with this. Not only is it a culture that is very tech savvy, it is open to using technology in many different places. As you said, Japan has the supply chain that is in a political environment where the government is very supportive. So we can imagine a lot of consolidation, a lot of investment in Japanese technology and electronics over the next few years, which will be very supportive for the industry.
Are there any potential risks that investors should be mindful of when considering Japanese tech equities?
Well, there's always risks, and there's definitely not a free lunch. Some of the risks would be this is an environment we are seeing rates increase. So that means funding will be more expensive. There is also a currency that is particularly volatile over the last 2 years. Mm-hmm. If we try to take the other side of that, rates are increasing, but from a very low base. So even if we have a rate hike this month from the Bank of Japan, still going to be a very low level relative to other parts of the market. So companies will be borrowing at a high amount, but not a very restrictive. The currency, we believe, will start stabilizing as Trump's policies start coming through. We believe that the differential between the U.S. and Japan is the real driver. It's not weakness in Japan. So once that differential stabilizes, we see that changing. But this is Japan stepping into the spotlight for a global industry, global sector. There are going to be a lot of competitors, but we feel confident that Japan is in a very strong position.
I was going to ask you about that. Now, with countries like Taiwan and South Korea dominating semiconductors, where do you see Japan in this space, reclaiming its position among the top players?
Well, I think there will be competition. There will be some overlap for sure, but as you highlighted earlier, Japan is looking at the whole supply chain, right from producing the wafers, producing the other electronic, to getting the final semiconductor products. And I believe, given semiconductors is now part of our daily lives, there will be a continued demand for this. I think there's still, particularly for the high-end ones, a long way for many countries to go till they can compete with the likes of Taiwan. So I think there's enough room for Japan to fit in. And remembering that this is also strategic for many governments, having that local resilience, the local tech resilience. So it's great when you not only have a product that people want, but you have regulation supporting that product. It does make investors sleep better at night.
Okay. And before we let you go, as the Chief Investment Officer managing investments at Nomura, what advice would you give investors looking to gain exposure to Japanese equities and tech stocks?
The unfortunate thing with Japan being relatively quiet for many, many years is there is not that much access to it. Access to the research in non-Japanese languages is not that easy. This is a space where there is what we call alpha, opportunity to outperform a benchmark. So we really recommend talking to experts, finding the sectors that they like, looking to be a bit more stock-specific. We believe this is a market where you want to dive into the details. It's not about buying the broad theme. Warren Buffett bought the broad theme a few years ago, and that was a great trade, but now the opportunity is being a bit more specific, finding where on that supply chain the opportunity is. But we think there are definitely opportunities and worth people taking the time to look.
All right. Thank you so much for sharing your insights today. It's been a pleasure speaking with you.
Thank you very much.
And he is Gareth Nicholson, Chief Investment Officer and Head of Managed Investments at Nomura.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.